So, yeah, nice to meet you, bro.
Uh,
Okay,
thank you.
so I want us to quickly have an overview of this pair, Euro USD. So, as we know, Euro USD and the dollar index are very important in um, giving us context and direction for what the market, for entire forex market is doing or where it's taking us. Right. So, for us to start, I want to quickly go to the daily time frame. I love the daily time frame to check what is happening on Euro USD. And from there, then we can look at what to do. So from the daily time frame on Euro USD, yeah, Oliver, welcome. So, Oliver, I'm using Euro USD as a case study for the analysis so that I'll try to apply most of the concepts that we've been using that has been working for us so that we'll see. I hope you can see the screen. Tolu, can you see screen?
Yes.
Okay, perfect.
Now I can see it well, very
Okay,
visible.
perfect. So this is the daily time frame on Euro USD. And as far as I can see, if I want to start from there, on what the free version of TradingView is giving me on the daily time frame, I am able to right now see this is the highest data that I can get. And then so I can see that this was some kind of a range for me from here. And then there was this kind of area here. Yeah, only if you can mute, there was this kind of a range here too for me. So within this range, notice that price broke to the downside, okay, giving us a direction to go. So based on this, I will say that from where I stand, Euro USD has been bearish from around this area. So what is the last swing high that provides context for this bearish movement? So the last swing high is this guy here, okay? And notice we all know what swing high means already, so I wouldn't explain that right now. So from this swing high, let's begin to see what is happening from this swing high. So this swing high first gave a very nice movement that broke structure. Okay, the structure or it broke out of the range from this area. So breaking this structure, it gave this low, this area of low, equal lows here. And price pulled back into where to retest, break and retest, price break, pull back to retest. And then it gave us a failure swing. This failed to give us a low. So it went up again to retest the same area. And then this time it gave us the break to the downside. So another break of structure. So we have two break of structures giving us this all-time low that I can see on the chart, the daily chart right now. So this is the lowest point that I can see on the daily chart from where I stand. So I want to check something. So I'll use my Fibonacci to measure from this high, swing high, to the low that it gave, and then see at what level did this pullback happen? Okay, where did this price trade to? Which level did this price trade to? So on the Fibonacci, um, we traded, or Euro USD traded into equilibrium. Euro USD traded into equilibrium and then drop a little bit and then pushed up into 61.8%, which is premium zone, the premium area for sellers to come into the market. Okay, so we have this entire area, of the range as premium. We have this entire area from the 50% area upwards, from the 50% zone upwards. Anywhere here, if price comes anywhere here, is premium zone. So we can sell. Okay. If price comes above the 50% zone, anytime price touches that area, we can sell based on the context using of this high, we can sell. So if price could even move to 78.6%, we might can still find good sales. If price move to 100%, we can still find good sales until that high, until this area is taken out or is defiled. Okay, there is a likelihood we might have sales from this area. Okay, so let me put that aside. Um, so now we have the equilibrium zone. So let's see the entire chart. Let's look at how price has been working within or around anytime it gets to the premium zone or close to the equilibrium. Let's look at that. So notice that this is just the Fibonacci that I'm using, which I'm pulling. Okay, it's just the Fibonacci that I'm using. Okay, good, perfect. So notice that within this area, we are selling. Now, the current price action is at 38%. If I measure from that area, it's at 38%. It's still not into the equilibrium or discount, sorry, premium zone right now. It hasn't got into that place right now. Yeah, but what if I extend the measurement to the low? Okay, if I extend the measurement to the low, okay, the all-time low that I see, then we have the current price action trading into equilibrium, 50%. So this entire swing from the top here, coming down, going up, coming down, going up, breaking structure to this side has given us an equilibrium pullback, a 50% pullback, okay, has given us a 50% pullback. This is an area where we can experience some sales, okay? We can experience some sales here, okay? We can experience some sales here. So it makes sense for us to see Euro USD selling, okay? So that is the first thing that I want us to notice. It makes sense for us to see that Euro USD is bearish or is going bearish right now. Do you guys copy this? Do you guys copy this?
Yeah.
Okay, perfect. Good. So Euro USD has traded into equilibrium, and that's why we are seeing a drop. And anytime Euro USD is dropping, it means that the dollar index is strong. Okay, so if we are to open the dollar right now, you will see that the dollar is bullish, and therefore Euro USD is bearish. Okay, but what is it that will be relevant for us right now as traders who want to trade? So for me, if I want to trade right now, I will likely use the most current swing high that I see. So right now, as it is, the most current swing high is this guy, this area. This is the latest area that price gave us that led to this break of structure and this low. Okay, so it is very likely that price wants to trade into this guy here, or price wants to take this guy out. So this move to the upside is likely that price want to take this area out, or price want to trade into this guy. And right now it's here, but it's still at equilibrium from the entire range context that we are using. So what I would do is to go back again and use my fib to measure from this area to the low here, okay? And look at what is happening within this context. So as we can see, you notice that as price tapped into this area, this swing low, it impulsively moved into equilibrium, giving sellers the chance to short. But notice that sellers could short to this place, but it failed to come very deep low to this side. It failed to come here. Okay. And then, so at equilibrium, price broke to the uh, upside again to 61.8%. But notice it is still within premium. Okay. It's inside premium. So inside the premium zone, sells. Okay, so you see price is selling. Okay, the buyers don't have power here, though price has been ranging. Okay, though price has been ranging in this place. Okay, we are ranging. This was a range, but still the sellers were in control around this area, though it was ranging. Okay, so you can see price hit 61.8%, it sold down to 38. You can see price hit 68.8% again, it sold down back to 23%. Okay, breaking structure, internal structure here to this side, but it failed to swing. It failed to give us a new low. Okay, so once we saw this failure, this failure is a sign that price wants to continue to move up. Okay, so price still moved up, but it is still inside premium, 78.6%. Okay, so until it breaks this area, this whole context or this whole swing high from the up here is still valid. Okay, so until price breaks up here, this area is valid. So we are at 78.6% right now, but from the earlier measurement we did, it is at equilibrium. So what do we expect from where price is right now? We had a move to the upside,
Over complete.
which gave us equal highs. Price drops and then became a failure swing. And then impulsively price moves to the upside to break structure, to break these highs. Notice the moment it broke, it retested and pushed to the upside. So let's notice what is happening. Price pushing to the upside also took out the previous high here. So we are having high, low, high, low. Okay, we are having high, low, high, low. Then around this area, when we got this high, price dropped to give us a low and failed to give us a high. Okay, so notice when there was a failure swing here, we had an impulsive move to the upside that took out all-time highs and all swing highs. So if we have had, once we have this failure swing around this area, failure swing means that it failed to give us a new high or a new swing. Once we failed here, what do we look for? We wait for a change in character. Change in character. What is the last low that led to this failure? It is this area. This is the last low on the higher time frame. Okay. Price impulsively drops down to invalidate it, to take it out. Okay. And it's trading into this guy here right now. So in a bit, we'll look at the characteristics surrounding where price is right now. But what should we expect right now? I expect price to trade bearish. Okay. But because this low has been taken out. So I will expect some kind of a retest, and then price will continue trading bearish. Okay, but bearish, where is it going? Where should price go, or where will price be drawing to going bearish? So that is why we want to do this back test or this analysis. Where should price trade to as price is going bearish? So notice from the earlier discussion, price hit equilibrium. And then this time too, price is hitting 78.6%, which is still at equilibrium. So from both swing highs and both contexts that I measured, price is still at premium, and therefore we can sell. Okay, that is a good area that we can take sales. So now we have a break, a change of structure, a change of direction. So we have to wait for a break of structure. Okay, so this change has happened. We have to wait for a push to the upside and a break. So once we see this break, it means we are now bearish. Tolu, we are now what? Bearish. We are now fully bearish. Tolu, are you with me?
Yes.
Perfect.
I'm also reading view. I'm following you the same way you are
Perfect.
doing it.
Now we
Just when
see, once we see something like this happen, we are going to go bearish, or we are fully bearish. But my question still remains, where is price going to draw to? So if I'm going to use the most recent swing low as this guy area, and the
it's
most recent swing high as this area, then notice there are still swing lows within the range as price was moving up. So let me even draw this trend line to guide us. So this area, this trend line as a guide, this trend line is comfortably taken out. This trend line is comfortably broken, okay? Telling us that
mm,
we are broken diagonal.
there's a break and retest at the top that of course is very
Yes,
clean.
yes, great. So the diagonal support has been taken out, and then it has acted as a resistance diagonally. So price fell to the ground. Notice we have an area of swing low here, and this is the most latest swing low where price is currently. We also have an area of swing low around here, and then we have the ultimate area of swing low where the move itself started from. So let me use my fib because we are bullish already. Let me use my fib to measure, okay, this range. Okay, on the fib, we are trading into 23% right now. So one thing I've observed using the fib as measurement is that before price makes any move, it will make a necktie on 23.6%. Okay, if you are expecting a pullback, okay, that necktie, anytime price will hit this 23.6%, if price is able to break this area, then the sell is going to hold. Okay, then the move, whether it's a buy or a sell, if price is able to break this 23.6%, then it's going to hold. So that's why I said around this area, we might expect price to break through and push up quickly for a retest. And then from there, we might see a swing. Where are we going to expect price to trade to? I will expect price to trade to equilibrium. Okay, that is the first expectation that I will have. I will expect price to trade to equilibrium. Trading to equilibrium means we are targeting the first swing low here. Our price would also likely target 61.8%, which is still at discount, which is all these areas are discount. This area and this area are all at discount for us to have a push to the upside. So with this context in mind, we know that the market looks for imbalances and liquidity. And liquidity is resting below all swing highs, mostly swing highs and swing lows, above and below them. Liquidity is resting there. And market is also looking for imbalances to fill spaces, to fill imbalances. Okay, that is what market draws to. So what are the reference points or the areas that we can locate on the chart? So first, we have done a good job locating the lows, okay? And the FIB is guiding us to also direct ourselves into the discount zone for us to have a buy. Okay, so this will guide us as to where, if we join a sell, where we should be expecting to take profit or where we should be getting out of the trade because there is a likelihood buyers might come into the market. Okay, good. So let's go close to let's go into um let's go a bit into what is happening at the top here. So at the top here, when price failed the swing and dropped to the downside, what reference point do we see? I see a fair value area here. I see a fair value area here. This fair value gap is very big. So Tolu, what do we do from what you learned from uh, the way you have been applying some of the ICT concepts to the other strategies you use? What do you
In
do?
my own perspective, I will prefer to enter from that fair value gap to, because from the body of this candle, if you take your rectangle now, from this bearish candle, last bearish candle, you use it as your breaker block, and this breaker block is still fresh. So yes. So I believe that there should be a retest to that side. If at all it break this low that you mark here, this big candle here, yes, this line. If at all it break it, that's another big confirmation that you can go in a standard lot. But for now, since I have not break, a wait for it at this breaker block where you drop this horizontal line. Yeah, that's the breaker block.
Okay,
That's where
good,
people are waiting for it to.
good. So let's notice on the left side here, around this swing low here,
Yes.
resting below it is still an yeah, so we had this was like a fair value gap that price traded into before it pushed to the upside.
Already mitigated.
Yes, already mitigated. So, but below it is liquidity and a block. Okay, so this is consolidation. So it's a lot of liquidity here, and then it's
Yeah.
a block. So it's likely that price may want to trade through this area to tap here, manipulate through this area to tap here. Then after that, it will fake going down and then push to the upside to pick, okay, to pick power or energy from this leftover orders from this big candle. Okay. So it's very possible that that is going to happen. Okay. And let's also notice that So if let's say if we want to use even the most current low, so you see recently price dropped into this area here, and then pushed to the upside. So if we want to use here as our range, short-term range, as our range, we can see that price has traded broken 23% and is heading, it has broken 38% also, and is right now is trading into equilibrium, 50%. Okay, so sometimes price will want to hit the 50% and reject. Sometimes it will want to break through it a little bit. It will want to break through it a little bit and then reject. Other times it will want to get to 61.8% before it gives opportunity to go bullish. But I will expect that price will want to either tap here or break through it and then reject. Okay, so that is what I should be waiting for, or I'll be waiting for right now. And then I will not buy. Okay. If I get the opportunity, I will take a buy. But because the sell pressure is very strong, the sell pressure is very strong. Okay. So, but then if price trades into this imbalance here, into this area here,
How
okay,
much?
this
70.
breaker, if price trades into this breaker block here, okay, and fair value gap here. Notice the breaker block, this area, and then the fair value gap, they all have confluence. They are all located around the same side. And notice there was an impulsive move which has also broken structure, taking a low out. Okay, so it will make sense for price to trade into that area. In case the 50% zone is respected around here, from measuring from the top to the 50%, the pullback is likely, the breaker block and the fair value gap is likely to rest around 61.8%, which is going to give us a perfect entry for us to join the trade to go bearish. And if we join from somewhere here, where are we taking our trade to? We are targeting what? Targeting first the low here as TP1, the low that will be here as TP1, and second, we might target the previous reference point, all-time high low here, this area. And then from there, we might want to see if price is able to break this area, and then we might want to see price trading into 61.8% or deep discount. Okay, so this is what we might expect. And it has to be in alignment with the dollar. The dollar must keep going up or must be strong for this to happen. But first, we'll be looking at something around this place. Something around this place. Okay, perfect. So any question, with the way that, so this is daily time frame, okay? We are doing this from the daily time frame perspective. So let's go to 4 hour to really see if anything is happening that will be of interest. 4 hour. Let's go to the 4 hour. Let's see the 4 hour. Good. So in the 4 hour time frame, yes, we see that there has been that break here and a little bit of retest push down. 15-minute time frame, we can see yeah, so price traded here. We are seeing a little bit of exhaustion like tiredness in sellers. So yeah, a little bit of consolidation here and there because this is not an active session. Like New York session is slow right now because it's getting to afternoon time. It's afternoon time. It's the afternoon session is not. I think it's not yet started. Yeah. So it's very likely that, so in case we push, in case price pushes from below, maybe drop a little bit to this side and then push. In case we push, probably price will want to take out this high into this zone here, somewhere here, and then we can have to join for sales, maybe something like this. Okay. There's a higher likelihood if the buyers come into the market very strong, then we might have price pushing up all the way to this area. But at least this area is okay. Price trading here and rejecting is okay for us to join for sales. So let's keep monitoring and see what is happening to the dollar index and what is going to happen on Euro USD. So the rest of the week and next week or the new month, we will be able to make some good returns from this from this thing that we are noticing. And if this is happening, then it's very, very, very likely that, and gold is already bearish. So it's very likely if dollar is strong, gold will continue to trade to the downside. Okay. And the same scenario is happening or is going to happen on gold. There is this support zone here that I believe gold is going to invalidate, sweep. Gold is going to walk through. Okay. But then I expect that price might probably push to the upside a little bit here on gold. This is 15 minutes and probably trade into this support area and then manipulate everybody to the upside. Okay. And then after that, distribute to the downside. Okay. And invalidate this support zone that we see here and target this swing low on gold. So this is what I'm thinking, or this is my thinking on gold. Okay, because gold also has been impulsive on the sales and has left fair value gaps, or I mean, it has to trade at some point. It has to give a balance or a fair price for sellers to, or for market players to join the market. Okay, so we will need gold to move up in a way into the premium or equilibrium. Then we can continue to short go. Okay. So yeah, from this I can say that most times, for the most part, Euro USD and gold are somewhat correlated. Yeah. Not very close, but yeah. That's what I can see. Okay. Tolu, any reaction from your side? Any reaction? Oliver?
But now to just that, I believe the entry for this
I'm cool.
You said what?
can you take the horizontal line? In my own suggestion, I want to do from this to
Can I do what?
take horizontal line.
This one?
No, this type of line, this straight line,
You
not a
said
straight line.
I should take which horizontal line?
Yeah?
I'm not
Imagine
hearing
you
you
take,
well.
okay, let me,
Yes, X, Y, and Z. This was fun. See you next time.
Can you hear me now? Yeah, I can hear you. Can you hear me now?
Yes.
Yes, I said you should take a horizontal line to show you something, the only thing that I'm just thinking of.
I should take horizontal line.
Yes, yes.
Like this one. You mean this horizontal line? Uh-huh. And put it where?
Yeah. Take at the top of this your last horizontal line to the upside. Yeah.
I should take it out.
This,
You said I
can you
should
hear
take
me?
it out.
Put it at the middle of this long week. You see this long week, put it at the top of it.
Here.
Yeah. Maybe I should join back. I could not see your screen again. It's already hanging.
You are not seeing screen again.
Yes, let me. Okay, I think I've